Hey everybody, Boris speaking. Forex. Welcome to the weekly technicals for the majors for euro dollar, dollar yen, pound dollar for March 8, 2019. Dollar breaks out. That's the big story this week. Certainly, dollar broke out against dollar yen this week, and definitely strengthened against the pound. The euro remains very much an open question as we enter the next week, and the charts there are probably the most indeterminate. But as far as yen goes and cable goes, there's certainly very, very strong moves at the close of the week. Euro remains sort of a 1300, 1450, very, very much in a low volatility range. This is one of those situations where the one thing I can predict with certainty is the breakout, one way or the other, is going to have continuation. So we have such low volatility, I think, as a matter of fact, record low volatility in the euro, that almost always inevitably follows by kind of a burst. The question is up or down, and it's dealer's choice at this point. It's really indeterminate as to which way it goes. We'll have to see. There's a lot of funded data this week. We'll see if that has any impact on the trade. But it seems like the buyers are coming in anywhere underneath 1350, and the sellers are coming in anywhere above 1400, and that's kind of a tug of war is going to resolve one way or the other relatively soon. Yen clearly broke out from last week. We took out the 111s. We even took out the 112s late in Friday trade now. And now it's really a question of whether does the U.S. data support the move. If we get strong U.S. data, the whole Fed on the sidelines, U.S. slowing down, everything has to be frozen in perpetuity narrative really goes by the wayside. And the market assumption, the sort of the dominant assumption of the market then is that we just had a blip in Q4, a blip in Q1, and now we're coming back to our normal growth patterns. And if that's the case, then certainly the Fed is going to reconsider tightening come, let's say, fall. And by that time, of course, the market is going to adjust. So you could be looking for a move all the way to the 13 to 15, but all of that is very much contingent on U.S. data starting to look supportive, and it's an open question right now. There's not a lot of evidence here that U.S. data has really rebounded in Q1 just yet economically. Sentiment has, but not economically. And then last but not least, cable definitely coming off. It ran too hard, too far, too fast at this point. The Brexit story, the idea that we're not going to have a hard Brexit is really baked in at this point. The only trade here is a negative supposition, is that they just decide to really walk off the cliff. And there's a corrective trade here just on a regular upside. So to me, one of the clearest shorts right now is cable, either straight up or on the crosses, and we'll talk about that in just a minute. Now, looking at the calendar this week, a lot of data on the calendar for the majors. We start, I think, we have retail sales, we have ISM non-manufacturing, which is services. That will be an important data point because remember, the manufacturing was kind of bad on Friday. It's still very much in a above boom bust area at around 54, but considerably lower than it was even a month prior. The question here is services, which is a much more important part of the U.S. economy. We're trading we're actually looking for a bump up to 57. If that's true, that should be positive dollar yen, and we could see certainly a move through the 1300s on that component. ADP comes in. That's a relatively decent precursor of NFPs. We'll see just how much of a give back there was. It was a very, very strong print on non-farm payrolls last month. There's almost a natural give back period whenever you have a strong print. So the question is, how much of a give back are we going to have here? Whether this is going to be maybe 150 or lower, that's going to certainly have an impact on the dollar. And then, of course, the Thursday, huge event for the euro-dollar trade, which is the ECB meeting. And here the question is, where does Mario stand? I mean, are we all know that they're sort of in a stationary mode looking to essentially taper. But the situation in the Eurozone is far from rosy. And the important question here is, are they going to sort of perhaps inadvertently or even casually suggest that a taper could be delayed? You know, it's not a question of whether they're going to raise rates anytime soon, but it's a question of whether they're going to delay the taper anytime in the near future. And if that's the case, that's obviously euro negative. We could take ourselves down through that 1300. I think the ECB meeting has the potential to be that catalyst for a vol breakout that we need to see in the euro as we go forward. And then, of course, Friday we close up with the U.S. non-farm payrolls. Market is looking for, where's the expectation here? Market is looking for definitely a large give back to 163. I think anything above 150 will, the market will swallow as okay. Anything below 150 certainly is going to be a negative print. The really more important point is this. We need to see this number at 0.3. If earnings aren't growing, the takeaway from the U.S. economy basically is there's growth all around and nobody has any money. And in that kind of a condition, the Fed is not going to raise rates. So really need to see the money, as Jerry Maguire says. And so we need to see average hourly earnings grow at 3, even 4 would be ideal. If we're at like 1 or 2, that suggests that irrespective of the growth of the U.S. economy, nobody has any money. That's very negative dollar from a monetary policy point of view, because the Fed is just simply not going to raise under those conditions. There's no inflationary push at all from that level. Let's take a look at the charts here and see how things line up. So you can see euro is the most confusing chart on the books here, because you just have this massive tug of war. As I said, every time they take 1400, the sellers come in, but every time they try to bring it down to 1350, the buyers come in. We're still above the 20 SMA, still looking mildly positive, but this is one of those kind of things that if we start breaking the 20 SMA, we take out the 1300s, it looks much more negative. Then you have a series of failed lower highs, and potentially, certainly the first test is going to be 1200. That gets broken, that becomes a much more negative construct for the euro. So for now, you just sort of maintain a mild positive bias, I guess, until you're proven wrong, but you could be proven wrong very quickly here, so I'd be very careful. Here's a much more clean and clear signal that we've topped out. So certainly this 3,300 came in as a big quadruple top here. We came off the highs. We closed pretty much on the lows of the day here. We're still massively far away from the 20 SMA, which gives us plenty of corrective moves. So we can go to 130 here and still maintain the uptrend, but correct here. As I said, I think almost all the positive news is baked in here. Any sort of negative wobble definitely takes us down to the 130s here, and cable remains as the weak trade of the week. And here's yen. Now yen finally, after a month of low volatility, and here's what I mean. This is what I was talking about to you as far as the euro. You have these low volatility regimes. They get broken. Once it gets broken, the signal gets very strong. So as I said, the euro either goes through the 1400 or through the 1300s, whichever way you want to go. You want to follow it that way. So yen took out the 11s and took out the 12s actually on Friday, just came off just a little bit off the highs here. Now it's really a question of the data supporting the price impulse. If we get halfway decent data, the price impulse has all the way to go to 1400. Has a nice big run. Yields have started to finally come off the bottom. We came off the 270 level. All of those things very supportive of dollar yen, and for now it looks to be definitely buy the dip story. It looks to be a positive trade into the week start. Wish you guys the best luck, the best trading. Boris, over now.